Michael, great to have you back. Good morning.
Morning, Carl. How are you?
Good. We talked after the news, and you were fairly constructive. Did yesterday add to that?
Yesterday wasn't anything mind-blowing for us, but I guess like having Bob Iger back in that seat. We turned positive the day of the announcement. I just think he brings a realistic view of the business, right? And he's not afraid to share bad news with all of us. And you need honest management teams to react to the reality on the ground. And I'm excited to see what he's going to do now that he's back at Disney.
Walk me through the content roadmap you think he's going to lay out. If it's going to be about profitability over subs, is it also going to be about Disney core over general entertainment, or can we go that far yet?
Well, Carl, that's one of the reasons why I've been, before this move, worried about Disney. I think the original Disney Plus vision was really about delivering for the core Disney fan, either the family, Marvel, Pixar, Lucasfilm fans. And as they gotten more and more subscribers, they started to expand their vision. I'm waiting to hear from Bob, but I just think moving into general entertainment is not the best move for them. It's a very low return idea. I'd rather have them having less subscribers, higher revenue per user, and a higher margin, and not stray from kind of the core strength of Disney. And I wonder, when Bob gets into the numbers and looks at the strategy, we went back and looked at our models the past 3 years. They've hit revenue numbers, but their cost growth has just been off the charts. Because I think Bob Chapek was trying to chase a subscriber target that was just not achievable, right? And I just want them to go back to their first plan, bring back spending, bring it down, and look at kind of the core business and hit the super fan and family cohort. That makes sense to me.
Yeah, I mean, it sort of speaks to this chase growth at all costs scenario that was playing out, sort of started by Netflix, repeated by other media companies, including Disney, and now the shift to profitability as we've seen the economic conditions begin to tighten as well. So I just wonder, you touched on it a little bit there, but how do you get to profitability for streaming if you are Disney? And is it a template that others can, I guess, look at and attach to as well?
Yeah, Morgan, I think Disney has a unique set of properties because they launched Disney Plus so quickly on the back of those strengths, right? So to your question, within Disney streaming, there are 4 different businesses. There's core Disney Plus, which I think could be a really profitable business because it plays to their strength, right? They don't have to tell you as a consumer what Disney stands for. You know what it stands for. Then they have Disney Plus Hotstar, this Indian business, which we would like them to come look at the business, maybe find a partner in India. India is a tough market. It's very competitive. It's a very low revenue per user market. So that's the second market. Then they have Hulu. People have debated whether or not Hulu stays at Disney or they go back to Comcast and create a JV. That is a lower margin business, we think. And then there's Hulu Channels, this live channel business, which we think is a terrible margin business, right? So the hierarchy of Disney Plus is probably the best business they have. The core model, the core Disney Plus, that could be a high margin business. It could be margins as good as Netflix's margins. It's the other businesses they need to really identify whether or not they're core or not. And that's what we're waiting to hear from Bob. Hopefully the next 100 days, they look at their other businesses and see, are these businesses you want to be in or not? Again, under Chapek, we were not positive on the stock because we felt they were not taking the time to reassess their strategy. They just were chasing subscriber targets at all costs, which was, a reason why we were bearish.